Martin, if you don't mind, I might just start off with you too, just coming out of your speech. You mentioned the curtain. I was opting for the shroud that's fallen from US-China tensions, with the trade dispute sort of expanding into currencies, sort of almost a broadening economic dispute, geopolitical tensions bubbling away in the background. What's been the impact so far on the economies of the Asia-Pacific, and what's their outlook now that we're in this new overtly contested environment?
So I think you don't even need to contain yourself to the Asia-Pacific. The fallout from that from those trade tensions is an increase in global uncertainty. And I think you can look around the world and see that dampening economic activity everywhere. You're seeing firms hold back. The IMF has estimated that if the sorts of tariffs that have been proposed are actually introduced, will knock around about 0.3% off global growth in 2020, and that's really a direct consequence of firms beginning to hold back. I think you can then overlay that by looking at the region, and you can see some specific areas of weakness emerging. So Japan grew reasonably strongly in the recent period, but if you actually have a look why, it's because imports fell faster than exports. And that suggests to you that Japanese domestic demand is weakening. Situation in South Korea is already contractionary, and tensions between South Korea and Japan have gone to a new level. That can only be bad for growth. I talked about China. Won't go any further there. India's slowing, though still okay. The ASEAN's a bit of a mixed bag. Singapore's a really good example. Entrepot economy opened to massive trade flows and has contracted quite sharply. And I think that's all in part relatable back to loss of confidence about where we are and where we're going, and some of the fallout of the trade tensions between the US and China.
Su-Lin, there's obviously been some significant volatility in global markets. What are they telling us about the outlook for the global economy, and what about the prospects for recession? It seems to be rising as well.
It has been a particularly volatile time in global markets, especially over the last week or so. But if you take a step back, and in particular we think bond markets are very instructive in terms of what they're telling us. So what these markets are suggesting is that they are very much relying on global central banks to come to the party. In G7 in particular, markets are anticipating rate cuts from all the major central banks. Markets looking for nearly a full percentage point of further easing from the Fed, so they just delivered a cut last week. There are expectations really of Bank of Canada following at some point. Europe as well, and we've got to remember European overnight rates are at minus 0.4% already. Markets are looking for that to move further negative. And clearly the Reserve Bank here has been active. New Zealand delivered 50 basis points of cuts yesterday. There is very much an anticipation that there will be further global easing to support what looks increasingly like a slowdown in growth. I think, secondly, what's instructive is when we look at 10-year bond yields, so the risk-free rate, these yields have collapsed in the last few months and have taken a particularly sharp leg down more recently. In some countries like Australia, they're at historic lows. So markets, again, signalling prolonged low growth. The flattening of these curves, in some cases inverted, are also signalling potential risks of recession and at best, continued slowdown. And I think the third one for us that we look at quite closely is break-even rates. And it's a little bit technical, but it's really an indication from markets of inflationary expectations. And this is what's worrying policymakers globally, that again, in some cases, these yields are down at some very low levels, historically low. These very low inflation expectations are being really quite entrenched. So markets are providing some really worrying signals here. Now, I've worked in markets long enough to know they don't always get the timing right, but the direction is usually right. And that's what they're signalling. Concerns about weaker growth, risks of recession, heightened geopolitical risks are feeding into that. Relying on central banks to come to the rescue, and that poses a whole bunch of questions, and this real embedded low inflation pulse.
Mm-hmm. So I'm trying to, folks, set the scene a little bit for where we are in Asia, and I'll just broaden things out beyond the economy a little and bring in Jaleh. Climate change impacting Asia. How do companies and governments handle the demand for protein in the face of population growth and a growing middle class in the region?
I guess if there was one thing that I could say with 100% certainty is that every single person in this room breathes on a daily basis and eats on a daily basis. So we have a big stake in climate change issues as well as agriculture and how we deal with them going forward. And of course, you all know that the population of middle class, the population is increasing and middle class is increasing, especially in the Asia region, and that means more proteins. How do we produce more proteins to satisfy this? To just give you a sense of numbers, to make it more tangible, is in about 10, 15 years, we need to put 20 years, we need to produce 70% more food and 50% more protein. Because if you look at the growth of middle class people in just Asia Pacific alone, it's going to be in 10, 15 years, it's going to be 5 times that of Europe and 10 times that of North America. These are a staggering number. We have to do something about it. And coming from Silicon Valley, we are so comfortable with saying that we're going to disrupt it with technology. And actually, we are doing it. We are not waiting for some disaster to happen, although the disaster is happening on a small scale on a daily basis. So I'm very optimistic that we are going to answer the protein demand within the next 10, 15 years and catch up with the demand.
Mm-hmm. Okay. I just want to bring it back to Australia a bit more, and the economy, where obviously growth has slowed fairly sharply since the middle of last year, and consumers are sort of putting away their wallets. Matt Bekier, you must be extremely frustrated that your proposal, which would have given us a nice spurt of investment and hiring, which the economy desperately needs, with a Ritz-Carlton in Sydney, has been knocked back, particularly when a key complaint about China, from Chinese tourists, who are obviously key to Australia's market there, is that we have a lack of high-quality hotels in Australia.
Well, just, I don't know about how many of you follow Phil Collins, but his last tour was called Not Dead Yet. And same with our proposal. It's not dead yet. But you're right, we haven't had quite the same support from government that we would have liked. And you're also absolutely right, this country needs more five-star hotels. So if you look at the underlying trends, and Dr. Parkinson referenced it, China continues to grow, will continue to grow. With increasing growth, my former colleagues at McKinsey have demonstrated consumer behavior is changing quite quickly. So the amount of money that people spend on entertainment is growing faster even than household disposable income. So incomes go up and a bigger proportion gets spent on entertainment. And the number one category, after eating, is travel. And if you look where Australia is, we lead in every aspect of what's desirable. So we're the number one destination in terms of desirability for the affluent Chinese, number one in terms of intention of going, but somehow we end up at number 14 on the ranking of where people actually go, where the Chinese actually go. And it's not an issue of airports, because there's a lot of capacity coming on. It's not an issue with airplanes. It's just no place for them to stay. And so that's why it is quite frustrating, and it's a big opportunity for us that is just drifting past.
So if you're looking to build approval for a tall, luxurious hotel close to a casino, it's better to be named Packer, kind of thing. Geoff, Geoff Culbert, you handle 44 million passengers a year. Fastest growing nationalities are apparently Vietnamese and Indians. And also no surprise that after Australians, Chinese are the biggest flying group. There are lots of other places that tourists can go, as Matt mentioned. I mean, how important do you see this hotel issue as being for Australia?
Well, it's critical in terms of making us competitive as a destination. So we are in a really fiercely, globally competitive market for the tourism dollar. I travel around the world a lot and go and visit airlines to try to encourage them to fly down to Sydney. And when I meet with them, they're not thinking about Sydney, Melbourne or Brisbane for their next international service. They're thinking Sydney versus LA, Sydney versus Bangkok, Sydney versus New York. And so we're in this global competition for tourists. And Australia is a hard place to get to. It's a long way to get here. So we've got to make it as easy as possible. Otherwise, they'll push the medal elsewhere around the world and we'll lose the tourists. And it's real money too. So our analysis says if we land a new A380 service into Australia from somewhere else, it generates around about $500 million of economic activity for the country and creates about 5,000 jobs. So some of our settings aren't perfect in that regard. There's more we can do about the visa process. I know there's a security overlay, but if you're an Indian tourist and you go into a tourism office in Delhi and you're thinking about travelling to Australia, you get told that it takes up to 30 days to get a visa. So what do, right? You can't wait 30 days to get your visa. The prices go up, the flights sell out, so you go somewhere else. The operating restrictions at the airport don't help. They're 20-year-old settings that were developed in the 1990s when we were doing 20 million passengers a year. We're now doing 44 million passengers a year. We have very little flexibility. We're getting very busy in the early morning period, which is when the Asian airlines want to land. And they're the most restrictive set of operating conditions of any airport in the world. So we want to compete. We want to go head-to-head with the world's best, but we make life difficult. Thailand went from 1 million Chinese visitors to 10 million Chinese visitors between 2011 and 2018. We're now at 1.4 million. Our ambition is to go to 3 million. I was reading a stat the other day, and I have to verify this, but Bali gets more Chinese tourists each year now than Australia gets.
Yeah, that's right.
So it's right.
Yeah.
And to go to Matt's point, we've got all of the indicators for why people would want to travel. Yet, and certainly there's a lot more positive things on that list that Australia has over Bali, but they're choosing to go elsewhere. So we have to ask ourselves this question: why are they going elsewhere? What are we doing wrong? What can we learn from other countries? And let's get in the game. Let's be competitive.
Sydney Airport, though, I mean, can it do better as a gateway? I mean, you had a little bit of criticism from the ACCC. What do you need to do to claim a bigger stake, I guess, without putting aside the government, the regulation side of things?
There's no issue with the accessibility at Sydney Airport. 35% of our slots are still unutilised over the course of the day. We have really good relationships with the airlines. We put incentive packages on the table ourselves to attract airlines to come down, which is our money. We've invested $4 billion since privatisation in growing capacity of the airport. That's private money, not taxpayers' money. So the benefits of privatisation of the airport have been significant, and we'll continue to market Australia. We'll continue to market Sydney. We'll fit in any airline that wants to come here. We'll find a way to do it. But we just need to get those policy settings right that make us attractive.
Matt, I'd be remiss to have a casino chief on the panel and talk about Asia and not raise the issue of the stories on Crown. I mean, how surprised were you at the reports? And is this an unavoidable price for Australian casinos have to pay for courting Asian gamblers? And the crackdown, I guess, that's going to happen, does that threaten the industry to some extent as well? I know there's a lot there, but have to ask.
Look, I'm not going to talk about the allegations against one of our competitors. They can talk about that themselves. I should just want to point out that Australia has a 3% market share in the global VIP business, 3%. If you come to Australia, you need to get a visa. You need to get cleared. You need to book the trip in advance. Nobody who comes to Australia, and you need to explain where your money comes from. We are under the same anti-money laundering rules as banks are. So, if you just want to come to gamble, you're not going to go to Australia. And if you have dodgy funds, you are certainly not going to go to Australia. There's a lot of other places from Vladivostok down to Cambodia where you can do that. You're not going to come to Australia. So what we're trying to do, and our fastest growing segment, is that premium mass segment where people come as tourists. They come for a week, they play golf, they get on the harbour, they take photos of the bridge, they bring their family and their entourage. It's a tourism experience. Yes, they like to gamble as part of the experience, but it cannot be the only reason. And so in terms of our positioning, our sweet spot is in that affluent market that is seeking a tourism experience. And that's why, come back to the hotel, having a brand like the Ritz-Carlton, which is in the top 3 brands in Asia, amongst the affluent customers, it would have been such an important asset for us to get through. But as I said, we haven't given up yet.
Yeah, missed opportunities. Jaleh, is Australia taking full advantage of Asia's growth opportunities in terms of food and services and lifestyles? I mean, is there potential for us to compete beyond mining and agricultural sectors?
Australia is doing great in agriculture and exporting food and agriculture to Asia region. Actually, you're a net exporter. However, dynamics are changing. Because of the climate change issues, we have to do agriculture differently. And so a lot of new technologies coming on board. And Stephanie said something that really resonated with me, saying that if Australia wants to be competitive and stay ahead of the game, you either have to compete in pricing, quality, or uniqueness, technology. So I think you have great brand equity. When a label says from made in product of Australia or made in Australia, that brand equity is absolutely magnificent. So you've got that. You can compete pricing because you're very smart business people. And also you can compete in quality and technology because you have a terrific science and technology base, fantastic workforce, high work ethics. So there is no reason you couldn't keep competitive in technology as well. Now, having said that, if I just gave you some numbers, these are not my opinion or my position. These are just facts and statistics. So I come from venture capital, so I know numbers that are invested in venture enterprises and in venture. So, and I don't want to compare you to China and America, US, because the populations are just not comparable. There's no point in comparing you to these big countries with big number of peoples. I would compare you with Canada, Commonwealth country, big size, lots of real estate, a small population. They are investing twice as much as Australia in venture investments. Then I can also compare you to another category of countries. A small population, but a small land and resources. Israel, Netherlands, Ireland, Singapore. So you're way behind in terms of the percent of your GDP, and I'm talking about percent GDP, so it's standardized. You're way behind these countries as well. So my hope and real desire is that I see you find a way to sort of catch up with these other countries and increase the percent of your GDP in venture investment.
Okay. Just want to address the audience that there's actually a session poll question. Which country in the region presents the biggest opportunity for Australian business? And the options are India, Indonesia, China, Japan, or Korea. So you're welcome to vote on that. Martin, I just wanted to come back to your speech. You mentioned that, and I'm probably badly paraphrasing, but unless there's a new accommodation or agreement between the US and China, that this issue that we've seen or way it's emerged is likely to drag on potentially for years or decades. What would that sort of agreement look like in your mind that could clear the air, that could restore confidence, or make both sides feel like one hasn't taken advantage of the other?
So I think there are legitimate issues that the US has, and they relate to things such as intellectual property protection, market access, and the like. And I think you could actually get a deal if the Chinese were prepared to play in other areas. You could get a deal that would help the Americans have confidence in the WTO, and you get the WTO back. But it's not a simple if you do one thing, it's fixed. You'd need a fairly extensive program of reform, because if we lose the appellate body, which is likely to happen before the end of this year, then we won't have any mechanism for resolving disputes, and we will be in a quite difficult situation. Now, what else does the US want? Well, China has given some very clear message about what it wants. It wants effectively symmetry, and so the Americans would have to be prepared then to treat China as if it was with this sort of in a way that it probably hasn't been willing to do so up to now. Now, if you did that, that's a good deal, which the rest of us would be happy with. On the other hand, if you get a deal where they decide to cosy up and they cut a deal that basically diverts trade from third-party countries to the benefit of the US or to the benefit of China, then that does nothing to boost. Confidence in those third countries. So it's not just a deal; it's got to be the right sort of deal. I think the key issue is, as you look forward towards the US presidential election, is there an opportunity? Is there a window in which you can get a deal that will satisfy both sides and actually reduce uncertainty globally, or will we run right up? Will people decide that they're going to put their eggs in the basket that President Trump loses the election? And I think if they do, then they've made the mistake of thinking this is purely about President Trump rather than about a consensus view emerging in the United States in policy circles. And even if you got a deal of the right sort that takes away the trade tensions, none of that goes to the underlying geopolitical competition, which is going to be there for decades.
I just want to put a scenario to the panel which I came across. It's basically this idea of the US establishing a Team West, and Martin touched on a couple of the issues that basically, a grouping that says China can't keep stealing secrets, it can't provide massive subsidies to state-owned firms, it can't have Communist Party-controlled companies buying strategic assets in other countries when those countries can't even buy a house in China, that it sort of rallies, I guess, the developed nations around those things to say, if you won't reform that, you can't be part of the global trading system. China then responds and says, well, fine, we can go our own way, with Russia or Pakistan or various other countries that are either politically close to China or economically very, very plugged into China to get a Team China. And then you have poor old Australia, which will sit in the middle between the two. I guess my question is there the potential for that to happen, and what on earth does Australia have to do? Because it was touched on in the newspaper today that we don't, this constant argument that there doesn't need to be a choice between security and economics, that we don't have to choose between the US and China. It's false. I think anyone who looked at it critically would say. So I was just wondering if anyone wanted to speak to those issues. look at you, Su-Lin, if you're interested.
Look, it's a very complex issue, and I think Australia in particular walks a very difficult balancing act, very much economically tied to China and the region and prosperity there, versus longer-term historic and defence ties with the US as a strong ally. So it's a very difficult tightrope, I think, for Australia to walk. I think it's very much in our interest, as Dr. Parkinson said, to try and facilitate the rules of engagement, to try and participate in agreements that are beneficial for the whole of the region, and at the same time make sure that we do as much here in Australia to lift our productivity and prosperity and control our own growth and destiny. So it's a really difficult one, and I think we are potentially at a pivot point, because increasingly it appears as if we are being asked to choose sides, and I don't think there's any positive outcomes from that.
Anyone else? Any thoughts?
Just I take issue with the underlying thesis that you can decouple writ large. So it seems to me that the people who are talking about decoupling need to get a little bit more sophisticated in terms of their language. If you're talking about the Soviet Union and the West during the Cold War, you had two autarkic economic systems. There was very little trade. They bled a little bit across the two blocks at some of the periphery countries, and in things like wool, wheat, sort of a few things like this. But you could think of them as effectively economically decoupled. You can't decouple China from whatever you call it, Team West, and you'd be crazy to try and do so. If you're talking about trying to create two autarkic systems again, if what you really mean is that there are a series of sectors or foundational technologies or the like where you want to be sure that you've got a supplier in whom you can have absolute sovereign trust, then identify what those sectors are and put in place the right sorts of things. In other words, don't think that the solution here is to throw up a hard boundary between China and non-China in every area. Work out the ones which you are particularly acutely concerned about and think about how you deal with those, and then the rest, accept that it's actually in everybody's interest that we've got an integrated trading system. So if China wants to be the world's best producer of largest producer of cheap consumer electronics, knock yourself out. I don't care. If on the other hand it's going to be the only supplier of quantum computing or the only supplier of 5G, then I've got a problem. But you also shouldn't think that countries will necessarily take decisions on those things. Like, we get commonly accused of taking the 5G decision as part of some sort of concert. That's complete nonsense. We took that decision before any other country in our own interests. We did the work ourselves. We took the decision. We moved on. It's other people who are upset about that, not us.
I might briefly open to the audience before we wrap up because we're running out of time. Has anyone got any questions in the audience? No? Okay. Well,
so either we were really good or we're in really bad.
Or we have
Yes, that's possible as well. Look,
They're not
hang on,
shy.
we do have a question here.
Hi, Glenda Corporal from The Australian. I admire your optimism. I'm not quite as optimistic about the outlook. But we've talked about Australia's relationship with China, with the US. Obviously, Australia's direct relationship with China is going through some tensions, 5G being one of the forces behind that. Do you feel that the Australia-China relationship and the tensions will start to have more impact on our trade relationship, which is, of course, is so important in terms of underwriting our economy? Already seen some issues with coal. We've seen some issues with barley. China has many other places to buy from. So are you worried at all that the political tensions will spill over to economic tensions?
I don't think China's at all interested in doing anything to other countries that actually impose economic hurt on itself. Our position on issues are clear. We're not standing around using a megaphone yelling at anybody. The issues will just get resolved over time, quietly, as they always do.
Anybody else? One off the back there.
Hi, David Landers. Question for the panel. Martin Wolf, the Financial Times editor, produced a column about 2 months ago, and using IMF and World Bank analysis, identified that China is a low accountability country and going lower. China also today is a middle income country. Half of China is still in poverty or low economic status. But China proposes to become the first country in the world ever to become high income and low accountability. My question for the panel is this achievable?
I'm the moderator.
Is it achievable?
Is it achievable?
Well, I think, David, the issue that none of us know is, can China break through, or will it get caught in the middle income trap that so many other countries have been caught in? We can all make suppositions, but we won't know. We won't know for quite some time. But you're right to point out that countries that have achieved that are countries that have high accountability in their systems. So it'll be an interesting thing to watch unfold.
Okay, I think we're out of time. I'll just have a look at our poll, which has just popped up. And it seems to be, Indonesia's done well. China, of course, is there with 31%, and Indonesia is equal. Good for Indonesia. India very high as well. All right, if you could put your hands together for our panel, and thank you very much for attending.